Hey, good evening, my fellow traders and investors. Today is Thursday, January 12th, approximately 8:30 p.m. Eastern Standard Time, and we have had quite a bit of bullish price action today, have we not? I want to take a look at that and kind of study what might be taking place here. Of course, in the past charts that I've posted on TradingView and my website and videos, I've indicated that this breakout was occurring, but is it going to continue? That's what I really want to study today, and not to rain on your party, but I have a few cautionary flags I want to throw out there just that we can monitor these items going forward over the next several weeks, because I do believe that have some significant things here that need to take place before this bull run can continue. So we should look at those things. Anyways, let's just get started, and I want to basically, the point of this video, 5 cautionary flags that I want to take a look at. First of all, this is my chart here. Let me put it back in logarithmic mode and put it on auto. I have brought this chart to your attention in past videos, and I believe I have looked at this or posted this on TradingView and static posts as well. This is a trend line on a logarithmic scale that we have remained above since July of 2017. It has not been broken with confirmation. Of course, we can see right here in March of 2020, the pandemic beginning, that we did break below it. We wicked below it. However, there was no adequate confirmation. So this logarithmic level of this macro uptrend has remained intact, and in fact there was question whether it would hold or break recently, but it has managed to hold, and in fact we've gone higher. You can see I have this macro downtrend as well, and this is drawn on a logarithmic scale from approximately March of last year, and we've just recently broke out. I made note of that in a recent video or post. I don't really remember which video that was. And one thing, guys, I'm going to try to do this year is to be less scattered in my videos and kind of just focus in on one thing rather than being all over the place. And sometimes I like to go through my lead indicators, and that's fine, but I get because I don't script this and I don't follow any prompts or cues, I just do this on the fly. Sometimes I get sidetracked, so that's much to my detriment and your detriment, because you have to listen to me. And here I go again. What I'm trying to say is I'm going to try to remain more focused in my videos. For instance, this video is all about Bitcoin and 5 cautionary flags that I see before you go all in and go all bullish in this market. I don't know that we have found a bottom yet. We very well could have. I have never been one to believe that we will go to 10,000, but I have always stated that the possibility is definitely still there. In fact, at this point, it may be more of a probability. I still don't know that, and am not one of those that is in the group of thinkers that say we are going to go to 10,000, but I definitely don't want to dismiss it altogether. And that is why I'm posting this video. I always want to kind of bring the other side, the other perspective. We've got a lot of bulls that are coming out of the woodworks now, and a lot of people jumping into this move. But I want to show you a few things that we need to be careful of. First, we are covering the good news. The good news is that logarithmic macro uptrend line did hold, and the other side of that is we broke out to the top side of this descending macro trend line. All right, that was breakout, what I call breakout number 1. Let me see if I can take it out of auto here. And oops, didn't mean to do that. Meant to move the chart up. All right, so breakout number one is the breakout above this descending trend line. Breakout number two here is, you can see I have a rough version of a cup and handle pattern-ish. It's not really true to technical form, in that the handle is typically 1/3 the depth of the cup. But nevertheless, when I see these patterns that even roughly look like a cup and handle pattern, often they do break out to the upside. And we saw that today. We broke out to the upside. And you can see here, I'm going to have to zoom in, that we formed a new candle. The new candle is forming a red body. So I imagine we're going to probably come back down and retest the neckline of this rough cup and handle pattern, and that neckline sits at around 18,200. All right, so that's what I call breakout number two. Now on to the cautionary flags that I want us to be aware of. First of all, you can see right here, number one on the RSI, we are very overbought. All right, when I first started looking at this chart today, it was at 82. We're now at 78, 79. All right, that's very high. Rarely, if ever, would anyone want to enter into any type of position when the RSI is that overbought on the daily. I certainly would never recommend it. I don't know that I ever have entered a position when the RSI has been that high. I pay careful attention to the RSI. RSI is one indicator that no matter what subscription level you are at on TradingView, you can utilize this indicator to help you making your trades. And I can see here that the RSI has in fact already started to come down. As you can see that, and that's why it's at 79 right now. It was at, I think it was up to 82 at one point today. But that RSI is something that's telling us to be careful here with entries. Wait for at least a retest of that neckline, I would say. I want to take us out of log view, and we'll view number two here. So what I'm going to do is I'm going to draw a trend line. I believe this comes from August of last year. Yes, it does. So I'm going to draw from the body, and we're going to touch these body candles here in November of last year, and we're going to continue that trend line down and take a look at what happens here, guys. We are right at that resistance. So we could call this caution flag number two. Whoops, wrong way. Flip that around real quick. All right, so this would be caution flag number two, this resistance area right here. Just something from a technical side to be aware of. These technical indicators don't necessarily mean that's the way it's going to be, but when you add them all up together, it helps you create a formula for probability. All right, so the more technical indicators that you get showing you that a reversal is about to take place or a new direction, the more you want to pay attention to that. And by the way, guys, 18,000, well, I'm in the way here, but the price of Bitcoin is at 18,787. 18,700 is definitely a significant level on another one of my charts. I won't bring that up right now, but that is in line with this descending trend line, creating a good area of confluence there that is going to act as a significant resistance. So that would be cautionary tail number two, or caution flag number two. As I was perusing the charts today, I came across Bitcoin shorts, and I noticed something that I have never seen before on this chart. And this chart goes all the way back to what, 2017, and take a look at the RSI here on the daily. Never before, it's come down here into oversold territory a few times, but never before have I seen it way down here. Now, when I was looking at this earlier today, we were all the way down to 11, 12. Now it's at 13. But either way, that is a historical record. I've never seen shorts so squeezed. This is really what that's indicating. Shorts either got squeezed hard today or people just exited because they knew it was time to exit. We're hearing talk from the Fed that 25 basis point rate hike going forward is going to be an acceptable standard. And that, in my mind, I view that as a pivot of sorts, because we were at 50. We were tackling this inflation thing hard. 75 basis points, 75 basis points, 75 basis points, 50 basis points. And if February gives us the 25 basis points, I view that as a sign that we are going into a softer the Fed is pivoting in essence. I believe a pause is coming soon, and maybe not in February. Maybe we only get the 25 basis points. Market will still treat that as relatively bullish, and then when the pause comes, that's when we get, of course, I don't know if you guys have been following my videos, but my thesis in the stock markets is that we are going to have a blow off top, which at least meets the previous highs of November 2021 or even exceeds those highs. I believe they will exceed the highs of November 2021. And that will only come after the Fed does do a pivot. All right, so since we're talking about the Fed and interest rates, etc., let's go ahead and just take a look at the dollar and see what it's doing. And you can see my chart here indicates we have broken below a significant macro uptrend. This was started in May of 2021. So for let's see, that's a year and a half. We have remained above this macro uptrend, and just today, in fact, we have broke below. Now I had this circle here because I circled that as an area of confluence. I thought we could bounce off of, depending upon what the language was coming from FOMC and the Fed. And recently we've been seeing articles about going forward 25 basis point rate hike. I believe that is why the dollar is continuing its downtrend. So this is very significant that we have broken below this year and a half macro uptrend. The dollar, I think, will continue to plummet. This is a head and shoulders pattern. That's what you're seeing there. And I think we do come down to this whole area down here with all these levels that I have created, and that will provide good cushion or good support for us to stop descent at that point. But that's where we're headed. We have some big significant support right here that we have to get through first. I don't think we'll get through that until maybe maybe March. I don't think we break through that until after March. But that's what we're looking at. So in line with that and agreeing with what the dollar is doing is the VIX. The VIX is down 10% today. Amazing. We broke through 1, 2, 3 significant levels of support in one day. Again, you can see this also indicated on the RSI. The VIX just continues to come down, and that is bullish for the stock market. So then what is the stock market doing? All right, so jumping over here to our S&P. This is very interesting, guys. So I'm going to zoom out here on this chart. I have just simplified this chart. We have a macro uptrend here, which I started in March of 2020. That was our lows, and I continued to draw that, and we touched it once here in June of 22, and then we broke below that, and you can see that was significant support, because when we broke below, we went down hard, and now we've kind of cut through it several times. But I left that intact because I still think it's providing us a relative amount of resistance. And what's interesting to note here, guys, is see this other descending trend line that I have, macro downtrend line. Now I'm going to zoom in here, and I want you to see they intersect exactly today where we have come into that area of confluence, huge resistance, and the S&P 500 just couldn't do. We couldn't break above the intersection of these two macro trend lines. And that's to be expected. That just doesn't happen. In correlation with that, we have this downtrend line on our RSI. And take a look at this. We hit this once over here, once here in December, November, and we've just hit it again today. So likely scenario is that we just don't break through that with a touch, but it's going to take us a few weeks, and probably not until, my anticipation is not until the Fed does actually raise their rates, and the market can see what that is. The market can confirm that that's going to be 25 basis points. So we'll bounce around under this macro downtrend for a while until we can get that confirmation. Then we break above, possibly hit our heads on that macro uptrend one more time before proceeding onwards and upwards for our blow off top. So I mention all that, of course, because that sentiment does spill over into the crypto space. And that being said, because we have some resistance here, and I expect a little bit more sideways movement before the next rate hike, that will spill over into the crypto space as well. That is a cautionary flag number 4. Cautionary flag number 5 comes in terms of a news item. I'm going to pull something up here, another tab. And I want to show you the headlines here. Crypto firms Genesis and Gemini, who were previously at conflict, at odds with each other, I guess over, I don't know all the details of it, but it comes down to money. But both of them are being charged by the SEC with selling unregistered securities. Unregistered securities is just a fancy way of the SEC saying, well, you're selling crypto, and yeah, you got to run that past us first. Of course, Gary Gensler, is that the way you say? I'm going to draw some devil horns on his head right here. You guys probably are all familiar with the FTX fiasco and what it was, and the ties that the ties that the parties involved in looked, what it looked like. So we have Gary Gensler here, head of SEC, former professor at MIT. Again, Glenn Ellison, who was the father of Carolyn Ellison, who was Sam Bankman-Fried's girlfriend. All right. And I mean, this quadrant just shows the nefarious connections, in my opinion, that these guys all had together. And why, I don't know that full justice for FTX investors will ever come to fruition. Just too much corruption, per usual, here in the great old US of A. Anyways, I wanted to point that out because this is definitely a significant news item. This is definitely something that we should pay attention to, and could very much affect crypto in the future, depending upon the outcome of these charges, all right, by yours truly, Gary Gensler. All right, so those are the 5 cautionary tales. I'm going to jump us here to the outro. Again, let's just review real quickly, just so you guys can keep these things on your radar. All right, so we have Bitcoin very overbought. You have it running up into major resistance here. 18,700 is also a level of resistance that I have drawn on another chart. That creates an area of confluence. I don't have that denoted here, but remember that number, 18,700, 18,800, definitely big resistance there. All right, we have BTC USD shorts, record-setting oversold territory. Shorts definitely got squeezed hard today and more recently, and maybe many people exited. Then we have S&P 500, which I use to foretell what the rest of the market is going to do, coming up into very good resistance with these two macro trend lines intersecting, creating good area of confluence, and the RSI is backing up that theory as well. And then, of course, we have the whole situation with Gary Gensler gunning for Genesis and Gemini. So we have to pay close attention to this, guys. This could very much impact the price action of crypto going forward. Hopefully this video helps you, and if it does, please, guys, let me know by giving me a like, comment, subscribe, whatever you can do to let me know which videos are useful to you, which are not. I appreciate all the comments from my last video on the pool multiple indicator. That tells me that you guys are interested in a review of indicators. I don't do a whole ton of indicators, but there are some things that I can pull up, and I can do more videos like that if you find those videos useful as well. So I got a lot of likes and comments on that, and YouTube, some in TradingView on my site. So I appreciate that. That helps me to stay focused on the content that is useful for you. All right, until the next video, peace, y'all.